It's beginning to look a lot like Christmas. It is December 1st. You are watching a stock market report where we use technical and intermarket insights to navigate today's markets. Get ready for the Christmas memes, people. They're here as you're bundled up watching your screens all day long. It's that time of the year. In today's video, we're going to talk about what took place in the markets to start this week off. We saw some interesting activity in the crypto section, and we have some intermarket charts and, of course, market conditions with some of the expected moves that we're going to go into. We're going to dive right into today to keep today's video pretty short. I also actually am going to be discussing where I'm at from a year-to-date basis, up 46%, and where kind of my cash portfolio to equity portfolio is. We'll do that in a little bit here. Start off at the 11 sectors that make up the S&P 500. Today, we saw the markets down ever so slightly. Quite a bit of volatility, though. S&P 500 down about 50 basis points. Energy was the leading sector. Consumer discretionary right there underneath it, and then technology. So we saw a couple of names start to come back to life in the technology sector, so it did help out the markets a little bit there. But the energy sector overall, when this is one of the top performing sectors, outperforming the S&P 500, it's not typically a great sign. As you can see over here, NVIDIA held together markets. Broadcom down, one of the larger market cap names that were down the heaviest 4%, but this is coming off of a week where it was up like 18%. Most of the day we spent today at the daily expected move, so down there at that lower daily implied move. We started with a gap down, mainly driven by some of that crypto news, and you can see we came up, we recovered, we celebrated, and then we got more volatility right back into the daily expected move. If we take a look at Bitcoin, you can see that this bounce was not all that great. And then we started to reverse. Very similar to here, how we saw this strong move down, saw a bounce, and then it reversed very hard. Now, as it stands right now, it's not a great trend, right? We've had a big breakdown. There's quite a bit of volatility. We don't quite have a bullish divergence yet, but for example, if we were to take out this low and this RSI were to be a higher low there, then we could see at a potential little bit of a divergence there. Now, if we look at our Sailor to Shift tool that measures the rate of change between Bitcoin and gold, this tool has caught every big sell-off, every big ramp up. It's a great tool. This is something I created a while back, and I use this all the time. So if you want to watch the video on how to put this together for yourself, I have that. Just type in, I don't know, Bitcoin indicator, figuring out money. You'll probably find it, or Sailor to Shift tool. Okay, so we went on a sell signal, sell trigger right in around this area, I believe right in throughout this week here. And since that point, we've been on that. Yes, it is extended reading from a rate of change perspective, and that's typically where you can get bounces. We talked about that on a prior video. We saw a little bit of a bounce, and it's coming back in ever so slightly. As you can see, gold is holding up rather well, and silver is absolutely outperforming with another follow through day there. Now, I would be very careful if you're trying to buy a new position up here, look for consolidations and so forth. This one down here is the miners, and this right here is a correlation chart. So as you can see here, miners are strongly correlated to silver. So if you want more beta, you can look into the miners. Silver is already more beta than gold, and so forth. If we go on, I wanted to point out after this sell side activity, the movement in MicroStrategy. Now, MicroStrategy, there was some news around this, and we've fallen already about 60% from these peaks, and it's in a horrible trend, right? It looks horrible. Let's call it what it is. Now, there's been times where I traded within here, and I'm calling it out now because today we saw, once again, a pretty large move to the downside. It was about 11 to 12% down, but yet we finished at the highs of the trading session, and this was the highest volume day that we've seen all year. So that day was the highest volume. Now, I want to talk about how, if I'm trying to buy the dip and stuff like this and for shorter term trades, and it is shorter term, the way that I do that is I look various expected moves from a daily, weekly perspective. And I'll give you an example of what that looked like today and how this could potentially lead to some sort of a bounce here in the very near future. And I'll talk about how I might look into playing this. But yes, earlier in the trading session today, there's been just so many bearish headlines and chatter about MicroStrategy, rightfully so. But this is typically where you end up getting reflexive bounces. And when it's full peak bearishness, and then you look at the chart, it's been already going straight down, okay, and then all of a sudden you have a reversal type candle with a huge volume bar. So this is where you want to start to see potential bases or bounces start to happen. So what do I do in these situations? I start to look at daily implied moves and weekly implied moves. So for today, right, if you were in the Discord, you probably saw that at about 7:35 a.m. MicroStrategy was under its 2 standard deviation expected move. And yes, this was something that Asher bot alerts for, right? Bam, 160.78, that was this level, and it tells you the time there. It comes right at this time. But that doesn't mean just buy the 2 standard deviation level. You want to watch to see, hey, is it a steep trend? And you look at the technicals and see how it might be shaping up. But you can see from this point, from the trend that we were drawing from here, it went sideways for a bit there, and then we ripped up higher, what, 10% or so, whatever that was, from 157 up to and around 172 where it's currently at. So that's how I personally would approach these type of moves, and you slowly build into it. Now, if you are not in MicroStrategy and you're like, oh, I want to get it, be careful chasing this type of stuff because it is, one, it's highly volatile. Two, you can't go too big of size because the trend is not in your favor and you're trying to fight a trend. So most people, and quite honestly, should stay away from it. Just like I say, most people should probably stick away from short selling because, one, if you're short selling, but yet you haven't even figured out regularly just trading from the long perspective, it's a lot harder to do. So if you are more tactical trader, what I'd say is maybe take the anchor volume weighted average price and anchor it to this low and see where that lands, and maybe see if tomorrow's price action pulls into it, maybe undercuts it and tries to recover it, offering you a better risk to reward, maybe for a shorter term bounce that you can make a quick profit and then get out. But overall, if we were to bounce, just a move from where we are now to 200, I mean, that's not anything big, but yet, what are we talking? Like, that could be around a 20% move basically from where we are to 200 and up into this range, that declining 20-day moving average. So there are opportunities in this, but you just got to be very, very, very careful with how you size. Now, I want to say that because a lot of people say, well, there's this narrative and then there's this narrative. Oh, and this is happening. Oh, and this could potentially happen. Honestly, this is all narrative that basically says if you want to fight a trend, you got to do small position, because if you do a small position and it goes down more, who cares, right? It's all about just cycling inventory, especially when you are trying to fight a clear downtrend. So that's just the thoughts on some of the crypto stuff, MicroStrategy, and so forth. Let's take a look at some of the intermarket stuff. The dollar was down pretty significantly today, but yet recovered most of it. So still kind of going sideways. The 10-year yield made a big move. And we did have some OPEC news as well, and that brought oil up quite a bit. And oil, right, could be a leading indicator for the bond market. And we talked about this on the prior video, but that's a big move. And you can see they do kind of go hand in hand here. Now, being that this is such a large move, I would imagine maybe that it takes a little bit of a breather in and around these areas. So maybe if you were looking to be long TLT, right, which is a bond proxy, right, that might be an opportunity to start to look for a potential little bounce there too as well in the very near future, given the velocity of just today's move alone. If we continue on, we'll look at some of the market conditions. We'll start off here with my sentiment index. You can see over here, this was on Friday's close. We were at a 67.5 reading. And when we did that and marked it on the chart, you can typically see price consolidate in and around these areas. Well, today, right, we had consolidation, and the preliminary reading right now is at 58.1. So this came off a little bit, giving us more of a neutral stance. If I show you what that looks like on the chart, anytime that we have a 58 or one higher reading, they're all over the place, so you can't really do much with that overall. Now, we are above the 5-day moving average in SPY, Q, IWM, semiconductors, biotech, DI, sorry, not biotech, that's just turned yellow. We're below it, but it's still inclining, but green across the board over here. And we're in an environment, right, that's positive gamma, which means that dealers will look to suppress it, being buying the dip, selling the rip, buying the dip, selling the rip. So as long as we can remain above a rising 5-day moving average, or it continues to rise, even if we undercut it, that is still a positive sign for the shorter term for these markets. If we take a look at gamma exposure, our call wall is still at 7,000. That's where traders are reaching up to. That would be the Santa Claus rally target area. Now, we're roughly at about 6,800, and there's not much going on beneath that up until this strike point back. I think that's about 6760-ish, right in around there. Okay, so if we can't hold 6,800, this does open the door a little bit lower. Now, if you want to look at some gamma exposure levels for SPY going into tomorrow, and you're in the Discord, or even if you're not and you just want to see these now, you can mark them on your chart, see how they work. But if you are in the query channel in my Discord, I have the trading ticks. You can type in /gex and type in the symbol SPY, and you'd have to do today's expiration. And what it will show you is these specific levels. And we have a big pull over here at 680. The red bars are typically where they can act as potential resistance or price can kind of magnetize them. And then you have 673, this big bar over here. It can act as a potential level of support. And we're kind of right in this area here. So if I mark that on the chart, I'll show you what that looks like. But another thing that you can also do is look for dark pool levels in there as well. And you can take the bigger levels and mark them on your chart for just levels of interest for if you're trading. So that's 683.1, 673.04. So if we put all these levels onto the chart, this is what it looks like. We have mainly my most important stuff is the daily implied moves, and that's what I pay most attention to. However, I do like DEX levels from an intraday basis. So I'm going to share them on what that looks like on the chart and just kind of walk you through some of the tools that are in the Discord if you're already in there. The upper daily implied move is about 680. 684, 686, kind of this range here. So if you want those levels, just screenshot and put them on your chart. 676 beneath us to 674. And we're right at that kind of gamma exposure level, that larger GEX level. And if this breaks away, it kind of opens the door to 677 and that lower daily implied move here. If we start to continue to break down, this kind of comes into confluence with our weekly implied move, this larger GEX level down here going into tomorrow's trading session, 673, and then also a dark pool level at 673.04. So if dealers are going to continue to buy the dip, but we get some more sell side, you know, a move from down here into this range, say if this were to happen tomorrow, this is going to freak out a lot of people, right? However, if you're aware that there are some levels of confluence here and that we're still in positive gamma, these could be excellent action levels if we start to see strength from them. Now, if all of a sudden we start moving up higher tomorrow, pay attention to, right, our larger gamma exposure, dark pool level up here at 683.10 and then 684. And it's kind of all in confluence here with the upper daily implied move there. So these are some of the levels that I'll be paying attention to in tomorrow's trading session. Hope it helps you out going into tomorrow's as well. That's all I got for you.